Professor Davidann, you're with Hawaii Pacific University. Tell us a little bit about the whole issue of oil prices and how it's affecting the world economy and also Hawaii's economy.
So oil prices, of course, are at an all-time high at $100 a barrel, and what we've seen is oil price volatility, but generally that volatility has been upward. So we don't really know where oil prices are going to end up, but we know that that supply is probably at its peak. We've either peaked now or will peak within the next 10 years. And after that, we're looking at a supply that could be diminishing, and oil prices will go up even further from that.
So there was a recent OPEC decision, I guess, on Friday. Tell us about that and how that impacted oil prices.
Right. Well, actually, didn't impact oil prices at all because OPEC couldn't agree on a quota system. OPEC functions as a kind of cartel. These are the major oil-producing nations, and they try to control the production of oil, which in turn, if they can cap the production of oil, then they can control the pricing of oil. Now, in the past, OPEC has functioned quite inconsistently, actually, in doing this. In the 1970s, they had a great deal of success. They took a lot of oil out of the market, and prices just jumped right up. And in the 1980s, they fell apart completely, and oil prices plummeted to $10 a barrel at one point. So historically, the success of OPEC has been very uneven. This time around, the division, actually the division historically has been between the nations whose oil fields are old and those nations whose oil fields are new. Saudi Arabia and some of the newer producers want to keep production up and stabilize oil prices. At this point, it's mostly Saudi Arabia. Iran and Venezuela and some of the other older oil-producing nations want to keep production down and prices up because they have older fields and they simply can't produce as much oil as they used to be able to. So there's been this fundamental division between Iran and Saudi Arabia for a long time, actually.
So the prices of oil have gone up over the last year, and then we saw them drop recently about, I guess, 50 cents or so in terms of, I'm sorry, gas prices.
Gas prices.
So maybe you can tell us about that. There was the crisis in the Middle East and other issues. So maybe you can give us the background of that.
Well, again, the price volatility is actually a function of a lot of different things. But the key to understand, I mean, before 2004, we really didn't have a lot of price volatility in oil. It would either go up and stay that way for 5 or 6 years, or go down and stay that way for 5 or 6 years. Since that time, we have price volatility because we're running up against the supply limit globally, the amount of oil that's produced every day versus how much we consume every day.
So what's the future unless there's changes? What is the future in terms of prices, and how is that going to impact the world economy in Hawaii?
Well, prices are going to go up. I think there's no doubt about it. My concern for Hawaii is that people are flying to Hawaii on airplanes which use a fossil fuel derived from oil, jet fuel. And I don't see a replacement for that, at least not a widespread replacement for that in terms of jet fuel. So I don't think there's any question that the price of an airline ticket is going to go up. This should be a major concern for Hawaii. I don't know that there's a lot of solutions to this. We need to convert very quickly to other fuels. The problem that we confront is we're consuming 86 million barrels of oil a day today. The United States military has done research and estimates that by 2030, we're going to be consuming 30 more million barrels a day globally than we are today. We just don't know where that extra supply is going to come from. Saudi Arabia says they can cover a bit of it. There's no way they can cover 30 million barrels a day. Saudi Arabia can probably produce 10 maybe even more than 10 million barrels a day. They're producing 9 million barrels a day right now. So they might be able to produce up to 12 or 13 million barrels a day. Okay, that leaves us at 25 million barrels a day. Then we have the tar sands oil up in Canada. They produce about 3 to 4 million barrels a day, and their estimate is they can produce another 5 million barrels a day. Okay, that gets us down to 20 million barrels a day. But then I don't know where the rest comes from. So, I mean, I'm not an apocalyptic person. I'm an optimist, but I'm also a realist. So I think we can find solutions, but we're going to have to find them very quickly. The estimates are daunting, to say the least.
Well, the big topic in Congress is always, should we drill in America or not? And of course, we had the BP oil spill last year, but we also have even our own congressional delegation split on the issue. At least they have been in the past, the senators. So,
Right.
What is your opinion? Would you be willing to share that? What do you think we should do?
You know, the last time I taught my course, The History of Oil, I had a student from California who got up and just denounced offshore drilling, offshore oil drilling, because in 1968 they had a major oil spill off of the shores of California, and there was lots of pollution on the beaches and everything, and it really ruined the tourism industry in California for a while. So he's on the environmental side. I can appreciate that. I mean, I don't think anybody wants to see that kind of environmental degradation resulting from spills. On the other hand, where does the oil for the 30 million barrels a day come from? I think it has to come from innovative techniques in drilling, new sources of oil. So I think there's a case to be made that we actually need to look at offshore drilling and maybe do more of it.
Do you have any final thoughts on the issue that you want to share?
Yeah, you know, buy a Prius, use less gasoline, ride your bicycle. You know, the thing about Hawaii is it's a high-density island, so we don't need all these cars. Public transportation and your own foot power are the best solutions to this crisis.
All right. Well, thank you very much. We'll have to have you back on when we see prices spiking again.
Okay,
Thank you.